2023, wherever you may be in God's green garden on this Monday, the 16th of the 1st. Okay, I think I'm sharing my screen. Am I sharing my screen? If I'm not, I am now. There we go. As always, well, as in 2023, we are starting with the gold chart. And we're looking at the gold chart because we're going to trade it as a breakout of the, what's it called? Asian session when London begins. And what we're doing is we're isolating that range. Here's the high of that range. Here's the low of that range. Let's put it in place. So we know exactly where we're going. There's the low. There's the high. And we've got exactly 1913.41. Let's call that 1913 even. People stop trying to ring me this time. That'd be good. 1913.0. That's the high. Sorry, that's the low. And the high is 1928. Let's call that 1929. That might even get us above that DR1. 1929 is what I said. There we go. So that's the range. What we're seeking to do is trade the breakout of that range. Now, I've simply put in these numbers. I'll trade it at very, 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 very small risk because it is in trial mode. So we haven't proven this is a system yet. And I've got to say, we're sandwiched in between DP and DR1. I wouldn't like to be taking this trade if I were actually trading a system other than this one. But the system's the system, and if it works, it works. And that's what we're trying to prove. So I will put an entry short here. I'll put an entry long here. And whichever gets triggered, I'll cancel the other. Take profit levels. We'll be using the daily resistance and support levels. First one's DR2, so I'll be taking profit at DR2. And I'll just be getting out of the trade, just closing the trade completely, nothing more than that. And I'll be taking profit at DS1. So if either one of those is hit after breaking out to the correct side, then that's exactly what we'll be doing, taking profit, full profit at those levels. A little bit less than 1-to-1 by the look of it to the high side, but probably not far from 1-to-1 on the low side. No, that's less as well. A little bit less. And a little bit less, in fact, a fair bit less. That's not the point. Point of the exercise is we want to get this trading at a very high win-loss ratio so that we can withstand small winners often. That's the whole plan. Righto, as we get near to that, I will put this on the trade manager. It takes a long time to do this. And if anybody's got a quicker way, more than happy to engage that. But here's how it works on the trade manager. Go into there, into inputs, and enable OCO is the first thing we need to do. So make that true. We want to go to entry level 1. We can find that. Here it is. Entry level 1. Buy entry level 1 true. And the level is 1929, as we said. So we put that in to that. Entry level 1, 1929. The stop loss for level 1 is the low here, 1913, which didn't go in there. I hate it when that happens. Stop loss level 1. There it is. 1913. Now we're already open. London has opened. We need to get this in the market quickly. Take profit level. Can I do that? Trailing stop? No. Trailing stop? No. Take profit 1 level. Take profit level. Enable TP1. Enable TP2. Target. That's what we want. Targets. All profit pips. How do we do it? I'll do it manually if we get in, because I need to set the entry level 2, guys. Sell entry level 2. We'll make that true. Selling at entry level 2, selling at 1913. And I'd like to see a take profit here somewhere. Trailing stop, no. Stop loss level, no. Take profit 1. Don't want take profit 1. I want full take profit. Take profit, take all profit level. That's what I want. I don't know yet, because I don't know if it's long or short. Right, we'll just click OK and see how we go. It's asking me if I want to buy at entry level 1. And it's also asking me if I want to buy at entry level 2. I told you this takes a long time. Modify. Can't do it. Let me go back here. Entry level 1, right. Entry level 2, right. We've got to change that from buy to sell. Sell at entry level 2, true. 1913, and I'll worry about the profits later. Now it's asking me if I want to buy at entry level 1. Yes, I do. Now it's asking me if I want to sell at entry level 2. Yes, I do. And it's telling me I've got an invalid stop loss. Of course I have. Guys, you know the levels, right? I'll fix that later when I don't want to bore you to death. And I think that's exactly what I'll be doing if I continue with that. But essentially, we're buying here at 1929. We're selling here at 1913. Whichever one gets triggered, we cancel the other one, and we're taking profit at DS1 or DR2, dependent on which one actually works, which one we get taken into. All right, that's it for gold at the moment. Sorry about all that. It is a very complex way to do it automatically. I would suggest you do it manually. Righto, let's get into something else, shall we? Look, I'm going to monitor this. I've never traded this in my entire life, but it has got a very, very strong win-loss ratio. So I've decided that I might just do that. And what it is the third Monday of the month on the S&P 500. It suggests, or it doesn't suggest, it says that you buy at entry. Now, I notice Swee's in the room, so she'll correct me if I'm wrong here, because I've never done it before. It says, you buy at the open of the day. So what I've actually done, because I'm a chicken, I'm actually buying a little bit above the open of the day. So the open obviously is the 3999.86 level. Doesn't make sense to me to go in there. So I've gone in at 4005. So I'm going long at 4005. I've got my stop loss, $25. If it works as pips for you, then that's okay. $25 below the open of the day. But I haven't done that. I've gone to 4005 instead of the open of the day. But the rule is buy at the open of the day. I'm pretty sure that's correct. Also, the $25 or 25 pip, we'll call it what you want, stop loss, I'm pretty sure that's true. Now, taking profit is the key to this. You have to take profit. Today is US holiday. Of course it is, Sweet. You're so right. So this may not work. You could be forgiven for that. In fact, you're probably supposed to have bought it on Friday. Am I right, Sweet? Perhaps. But I'm going to stick with this. I'll stick with it. You will not trade the January. Oh, okay. So not working for you. That's cool. I'm going to try it. If it's got a win-loss ratio that high, then I want to be in and take a look at it. So again, guys, this is not my trade. Last few years, it's lost. Well, it's 23 now, sweet. So we'll try it again. Huh? Maybe that's because of COVID. Do you think we've had a disruption? The disruptor COVID. I'll call it that anyway. Not that it's getting any better, I've got to say. But I'm going to try it, see how it goes. I'm not risking much money, mind you, so it's all good. So that's the rule. First positive open, or first positive open, I think it is. So in other words, if this is in negative territory tomorrow, I haven't been taken in, obviously. If this is in negative territory tomorrow and you have been taken in, you wait until you get a positive, and positive meaning, obviously, you're in profit. Open the next morning or close the previous day. I think it's generally the same thing. Then you can take your profit, wherever you may be. Just get out. That's the rule. So that's what I'm going to do with that one. Righto, so that's it for the automated stuff. Let's get into stuff that I was in previously. So last week, I went short Kiwi CAD, and I think I had a set profit level. I can't remember where the set profit level was, but I actually took profit, and I don't know where I've taken profit, to be honest. It was Friday late, and I just took it. So I've taken profit, reduced my risk, and here's the stop loss up here. At the moment, prices are hovering around the pivots here. It's got to get below those to give me a chance. My next profit level is down here at 83.44. If you're of the inclination that I've got this right, then my entry was there. And my stop loss, as you can see, is at 85.97. So not doing so well, that trade at the moment, but I have got it protected by taking that first profit level. So very little at risk here, no big deal. The, pardon me, next one I have is an order, and I've got Aussie yen short this week. Let me get rid of this. I hate this up here. It just makes a mess of things. Aussie yen. Now, trading Aussie yen somewhat reluctantly, but you would have all seen the yen have a pretty strong week last week, and certainly a strong close to the week. So my theme, I guess, for the week is let's see what happens with that. Can it continue? And I think I've got to give it a chance, because it's been downtrodden for such a long time. You know, it's been in absolute SH1T territory for so long that it's now got some sort of positive vibe about it. And I think that's probably worth following for now. And I think that's probably true of what the market's mood is currently. If the market seems to be going in one direction, and to me it does, you've got gold rallying, you've got the S&P rallying, you've got everything against the dollar rallying, simply because the dollar, well, I don't know if it's simply because, but you can see that the dollar has now gone through a level that I anticipated it would bounce from. And very, very strong week last week, perhaps on the back of news, perhaps just because it's been so strong, and now it's coming back. We've got, not that we didn't anticipate that, of course. It was pretty clear that that would happen eventually. The level that I was speaking about last week was this one, and I was certainly expecting price to climb back above it and put on a rally probably back to this area here. That certainly hasn't happened. Can it still? Of course it can. Will it? I'm not sure, to be fair. The market seems to have made up its mind that it's wholesale selling of the dollar at the moment. We are at some sort of support level here, so I would expect a little bit of a pullback, maybe to this level. But once it gets to there, I really don't know what happens next. You can see this is setting up as a clear false break of the top of this channel, and any pullback here, to my mind, becomes a selling opportunity. So I've got to be thinking that way, which means things like everything against the dollar should continue to rally if that's the case. But That said, I think this market's oversold, the dollar index, and I think the other markets are overbought to a degree. So for that reason, I'm waiting very, very patiently on pullbacks on all of the, well, just about anything against the dollar, to be fair. I think the one I'd like most of all is euro dollar. And the reason for that is a technical one, not fundamental, but fundamentals, to my mind, should be probably looking that way also. You can see why. I think technically this is a sell zone. If it goes through it, then I've got reason to think I'm wrong. But at this point in time, that big rally there for the last 3 months, as it turns out, we're not through January yet, of course, really is at this point still a pullback, because the trend is most definitely down, no doubt about that. The thing I think may happen is we'll probably have another look at parity at some stage, which is down around here somewhere. So this pullback could be substantial. What happens then? Look, a lot of water's got to go under the bridge at that time. But my thought process at the moment is I want to be a euro dollar seller. I want to be probably just about anything against the dollar that is at a resistance level is where I want to be concentrating. Aussie dollar is probably not in that ballpark. I do expect a retracement, but you can see what Aussie dollar's done. It's crept back above this horizontal level, and a retest here would get me very, very interested in trading Aussie dollar long. And you can see it's got burst through that resistance area. So pull back here, I do get interested in Aussie versus the dollar. So that's kind of, I won't say against the thesis of the pullback on the what's it called, the US dollar, because this would play exactly into that. So if the dollar rallies, this comes back to here, and then it becomes a buy, in my humble opinion. So that's the thesis. Everything else is very much the same. The yen pairs, I think, are the ones that are most interesting this week because of the rally that the yen has had. And if there is a pullback on those pairs, do they provide another selling opportunity? Good question. But I think the pick of them, for my money, were three: euro yen, pound yen, Aussie yen. And I know I'm saying that the Aussie's set to rally again, but I do see it coming back to here. That's for sure. And that's what I'm expecting for the first couple of days this week. I'm expecting Aussie to pull back. I'm expecting the euro to pull back, expecting dollar index to pull back. And what happens after that, we shall see. Hopefully set up as a buying or selling opportunity, depending on which way you're looking at charts, I suppose, or which currency pair you're looking at. So that's my thesis for the week. The orders I've got in the market I've given you today in terms of the euro. Let's have a look, see if it's possible to actually get this pullback that I'm looking for. And it does look good to me. You know, you've got a double top, triple top, call it what you want. We've broken below the, what colors am I using? This is the daily pivot, isn't it? Yes, it is. Pullback here would get me interested. Maybe it's got to go beyond there, and that's fine. But I need some sort of trade line to trade off here. The only one I can see at the moment is a little bit sharp on that chart, but not on this one. And there it is. The other one I'm looking at is this one, but it's too late. You've got a clear false break there, which played out beautifully. Daily pivot test. Where was I when that was happening? Not in front of the charts, of course, but that's your classic slingshot false break, and might have worked out beautifully. As I say, a break here and a retest of the daily pivot would get me interested in trading, probably just down to the weekly where there's a strong support level or softish support level, but that would work on a 30-minute chart for me, or an hourly chart. If you can get a small enough candle, say 10 pips, something like that, you can probably pick up 20 here. So I think that's on the cards. So that's what I'll be looking for in the next hour or so. If it does set up, happy days. I would love to know from Ash what happened last week when everything was supposed to do pretty much the reverse of what I was looking for. What happened? Why did the dollar continue to fall, and why are we now in a position where we've got gold soaring, we've got everything just going nuts? Are we due a pullback? I can't hear you, mate. Perhaps you are muted.
Yes, I am. Sorry, mate. That
There
was
you go.
classic kind of amateur Zoom problem there. Yeah, no, you're absolutely right, mate. I think the pullback is due. I think we are kind of like, we're kind of getting ready for it. The reason that the dollar decided not to go anywhere, but it was flat in the end, wasn't it? And we kind of saw, a little bit of a boost in the indexes, and the other currencies did okay against the dollar in the end, and it pushed down, but it was late. I mean, it was just a slew of kind of data that didn't suggest that the Fed are going to do anything but this 25 basis point rate hike, and we got the University of Michigan sentiment index that came out, and the inflation numbers from that. They edged a little bit higher, but nothing kind of substantial and significant. Yes, we're due a pullback, and the question is what's going to drive it. I completely just on the Aussie yen, I couldn't agree with you more. I mean, I that's exactly the currency I'm looking for this week as well. And I'll show you what I'm looking for with the Aussie yen. There's a couple of things really that stand out. But let's just quickly get to the Aussie yen first. So this is the Aussie yen. Now, what I'm after with the Aussie yen is for it to get up to the weekly pivot, because if it can get up to this point here, then that will become really interesting for a few reasons. Because firstly, it's got the weekly pivot as a potential area of resistance, but you've also got this area here, which you can see quite clearly on the 4-hour, but it's it's even better on the daily. It's this region really, that the zone between the weekly pivot and the monthly pivot. When it gets up to that point, then my interest is really going to sharpen. And I think we're aiming for the same point. I'm not exactly sure, but I've got this trend line down here, which drives us somewhere in the region of 82.70, I think is the area that I'm quite interested in. It would have to take out this area here at 85.60, but we're currently at 89.40, 89.50. I'm looking for around about the 90 level, which again is a resistance point, because of the strong number there. There's a little bit of resistance here, so I'm looking at Aussie yen downside. Now, let's talk about some of the reasons why I'm looking at Aussie yen downside as well that are off the charts, because it's not really all driven by the charts for me. In fact, it's the secondary aspect. But I think the Aussie's got a pretty good chance of weakening over the course of the next few weeks against the yen, and the yen's got a chance to strengthen. Now I'm going to bring up this. So firstly, the yen has really started to rally off the back of the announcement of yield curve loosening control, if you like, that the Bank of Japan said they weren't going to do. And what they're effectively saying is that we will buy bonds at a more expensive price. So it's putting pressure on the government. So the Bank of Japan aren't buying bonds at such a cheap level from the government anymore, and the government are going to have to pay more in the debt back, because they're switching the yield. They're buying it at a higher yield. So the government don't do quite as well out of that, because they're going to have to pay back at a higher interest rate. So this is what we've had. Now, yesterday we had PPIs from Japan that came in above expectation, and I think none of these numbers would really matter if the Bank of Japan hadn't done what they'd done. But they specifically said they weren't going to do that. They said that the yield curve control was going to remain, and then they flipped on that promise. And because they've now flipped on the promise, expectation from the market is they could do it again. So even though the yield is sitting somewhere in and around the 50 basis point level, and that's their price that they would buy at, there is expectation that they could broaden that again and go to 1%, and which is effectively quantitative tightening. That's what they're kind of going through. But the inflation data year on year, it's a switcheroo. Inflation data year on year came up a little bit hot. Month on month was lower than previous, but it is still higher than forecast. So there's no real reason to kind of like suspect that the yen is going to start to weaken again off the back of what we've seen so far. Inflation gauge from Australia came in weaker than previous month as well. So if you sort of like think of the counter moves of the two currencies just on the day, and forgetting everything else, and you were sort of looking at these two currencies without any previous opinion, then that would suggest yen strength and Aussie weakness. But there's a few of these things going on, and if you kind of look through the week, the important number from Australia is not the consumer sentiment so much, but the labour data, which comes in on Thursday, when we see the employment data and the unemployment rate. If this starts to push up, if the unemployment rate starts to push up, that will also suggest that that there could be possibly an indication of some loosening from the RBA, which is going to weaken the Aussie potentially, and we might start to see the yen strengthen further. Now, I think at the end of the week we've got some inflation data from Japan, which might well be done by then. So on Thursday we got the national core CPI data that sneaks up again, and it is predicted to as well. They're talking of that, so that inflation data just creeping up a little bit. So Aussie yen to me, mate, looks exactly the same as it does to you. I don't know whether we're going to get the trade before the data is released, but if it shapes up before the data is released, I am going to take the trade and look for those numbers to kind of help me out, because of what we've had previously. The big thing is the Bank of Japan, and they do seem to be a lot more hawkish than they were previously. Now, when it comes down to
one more to throw in there, mate.
Yep.
It's, what was it, 300,000 deaths in China, COVID deaths.
Oh no, I didn't hear that.
Yes, 300,000 COVID deaths. Now, time period, that I can't tell you.
Right.
But that's what's been released in Australia today, or yesterday. Right. I think it was on the news. I heard that instead of, I think that the releases from China were saying 17 or 37 or something like that.
Right.
The number has now been squeezed out to that ridiculous amount of people.
Right.
Terrible amount of people, obviously.
Yeah.
So that, I would suspect, is going to have implications for everything coming out of China, I would have thought.
Yeah.
And certainly restrictions on who comes into Australia, in terms of, already there have been, and I guess we're going back to square one at the end of the day, where we're asking people coming out of China to undergo screening, have a COVID injection or immunisation, whatever, or a test before they board the plane, and certainly before they get into Australia. Yeah. So that's not such an issue, I suppose, on the surface of things. But when you consider that we're going into a new year of education, believe it or not, I think education from China is something like, it's certainly in the top 10 of our GDP. It's an incredible amount of money that comes in from China for students being educated here in Australia.
Right.
That should have an impact. When you think of probably supply chains are going to get worse, even, one would suspect. Yeah. So I think the Aussie might have a few headwinds, mate. In that area as well.
You could be right. Is your camera not on?
Oh, probably not.
I've got you down as you look like a disc to me. There you are.
There. I'm sorry, everybody. My God, people just go, holy dolly, look at him.
Yeah, do you know, interesting stuff there, and also I've got a feeling. Let's just have a quick look at that because there was some other data I think that came out of China. Let me just see what the most recent stuff from China is, because there was some weaker than expected numbers as well. Exports were reduced, imports were reduced as well. The trade balance is actually, but it was better than expected. I think that you can see that there's a slowdown though. I think that's what, one aspect of this is that there is a slowdown from China, because even though these were a beat, we're still in negative territory on both imports and exports. So we are starting to see the slowdown from China. I think there was some other bits and pieces as well, but oh, here we go. GDP. This is going to be released tomorrow, and there is a prediction that GDP is going to reduce to 1.8% from 3.9%. So that's also, all this stuff is potentially going to have an effect on Australia as well. We've got the Chinese unemployment rate predicted to go up to 6%. So there's a few things which suggest some potential Aussie weakness is on the cards here. Now, when it comes down to the dollar, which is really important actually, because there's a few things that I was looking at. You're absolutely right with the euro, is one of them, but the other one is silver. I think could be of interest, and we talked about it last week. Silver downside to me seems like a pretty high probability, and the reason for it is that if we have got this global recession, which hasn't yet taken hold yet, but if it does take a grip on the world, then industrial metals potentially should do quite badly. And also that would lead us back to copper, which we'll have a look at as well. But we'll have a look at silver, we'll have a look at copper, and we'll just sort of have a look at the data releases from both Europe and the United States. United Kingdom also really in focus this week, because we've got average earnings and unemployment numbers from the United Kingdom. Again, if this sneaks up, that should be weak for the pound. CPI data from Canada, if anybody's interested in trading the CAD. Then we get core CPI from the United Kingdom, and then we get to the euro. So the euro's release of CPI data is on Wednesday. So this may well provide some base of evidence which suggests that we could start to see a little bit of a sneak down with the euro. However, that is going to be dependent on a big jump down in CPI. And I think that there probably will be, but that, as so far as needs to be released. Core PPI and PPI from the United States also on Wednesday as well. So big day Wednesday, mate. This one could shape the move that you're looking for with the euro dollar. Yep. And then on Thursday, we do have some numbers from the United States again. Building permits and housing starts could show some more deflationary kind of pressures. And then, of course, we got CPIs from Japan on Friday. So on Thursday as well. So Wednesday, Thursday look to be the days to look into. Now, if we look at the charts on what might shape up and how we're going to trade that. Well, the first thing is that, as I say, I need the Aussie up here. It's going there right now, which is becoming a lot more interesting to me. So what I'll be looking
still
for.
On your, there you go.
Oh, sorry, mate.
Must be a bit of a lag. I didn't have your chart, but I do now. Yeah.
Yeah. So I'm looking for the Aussie yen to push into this area here, on the 4 hour, if you like, and then I'll be looking for the just on the 15. That's what I'm really after, to see if I can get a trend started on the 15, and if I get a trend to the downside beginning somewhere on the 15. This is where it is right now, which is low, but I don't expect that to be the case. I would look for something which would suggest some sort of price movement, which would come maybe back a little bit, go up, come back a little bit, and then go up. So I can get maybe a 15-minute break of a trend a little bit higher, and then I can try and trade this area here. So it's got to touch this zone first, and then as soon as it touches that zone, I'll be looking for a trend on the 15-minute to start to the downside. Then I'll try and take something on the Aussie yen. Silver, which is the other one that I'm really, really interested in going after, has already started the day pretty negatively, but it's still got a pretty strong trend to the upside on the longer term time frames. And again, you look at this on the 4-hour, that's going to be very bearish move down to this particular point if it doesn't have any pullbacks on the way. So I'm kind of looking for this to come down and just float around a little bit for the next few days and then see if we can get some downside on silver. Now, the way that I thought that this could be played is with a hedge against gold, because gold is also coming down, but gold will not come down anywhere near the same as silver. And if you look at this on a weekly, it looks to me that that silver has got a 10% move and gold has probably got a 5% move. This is it on the weekly. So if we look at this on the weekly, it's probably in and around 1812 for gold to come down. Now it's currently at 1915, so we are talking about around about 100 pips to the downside. So which, on that is around it's near enough a 5% move, just to kind of not want to split hairs on it. It's around about a 5% move lower. You look at silver, same sort of
Seasonal
thing.
traders have to be over the moon for that, wouldn't they? Work perfectly for them.
Oh, for sure, mate. I think the move to silver is down to 22.12, and we're currently at 24. So you're looking at something closer to a 10% move. So give or take a few percent, you might end up with around about an 8% move on silver and maybe a 6% move on gold. But there is a bit of there is a spread between the two of them, which could yield around about 3%. On the spread trade. So silver's of interest to me for downside. Gold I would hedge, which means that I'd buy it. But they both probably come down. I just think that silver would probably come down further, and the reason for that will be dollar reacting. I think they'll both react to the dollar. The dollar strengthens, then silver and gold will probably weaken. I think the recession aspect of it plays into the fact that silver comes down harder. So I think that silver is a downward trade. Now, of course, you could just take the trade in silver and just go short on it and not hedge out the position, which is also valid in my opinion. So silver for some downside. Euro you've covered. Aussie yen, the same for me, downside. And then we get to the indices. The indices are of interest. And what I thought with the indices, which is quite interesting, is potentially if the news flips in the opposite direction. So preparing for both aspects. Dollar strength means that we're going to go short on euro, short on silver, and short on just about anything against the dollar. If the dollar continues to show signs of weakness, so let's say that inflation data does reduce and recede sufficiently, and we see some dollar weakness, then the Nasdaq looks really interesting for some further upside, and it's got some room, because if you look at the Nasdaq, it looks like there's this kind of longer term trend line here. Now, the Nasdaq could do with pulling back to the weekly pivot, maybe to the monthly pivot as well. So it's got a potential retracement of around about looks like around about 1% to the downside. So maybe a 1.5% move to the downside, then starting to move back up again, and that could get around about a 5% move higher from this point. Now, if you were looking for that on a straight up trade, that would be fine. But I wonder, because of the strength of the yen, whether you could then flip in a hedge on the Nikkei. But the issue with the Nikkei is that it is at a major level of support here. So so that would have to pull back a bit as well. So there's a few. I think there's a few really interesting potential trades here, mate. If you're looking for hedge trades, then gold silver looks pretty good, and possibly Nasdaq Nikkei also looks pretty good. For Nasdaq long, Nikkei short. Now that would be the flip of dollar strength. So dollar strength, silver short, gold long. Dollar weakness, I would say Nikkei short and the Nasdaq long. So that's what I'm shaping up for. And then just a clear kind of trade which is well away from anything to do with the dollar. Then that would be the Aussie yen, which might be the better of all of them anyway. I don't know, but because it kind of stays out of the way of trouble against the dollar. So yeah, a few ideas this week, mate. Anyway.
So we've got nothing to argue about. That's no good.
Nothing at all. No, nothing at all. Because we're both. I mean, usually even though we might not have an argument, we've still got a different currency pair that we want to trade. But this week, I think we're on the same page. I mean, it also brings in the Kiwi as well. You know, the Kiwi is similar. Aussie, incidentally, is one of the weaker currencies when it comes down to seasonals for the next couple of weeks.
Ah, interesting.
So that's something else to kind of to factor in here. If we have a really quick look at the COT data as well, then we can just get our last bit of information and see what this is kind of suggesting. You look at the yen. Now the yen it's still weak. You know, it's still in the net negative. So anything under this zero line is net negative. The sellers are still in control, but we have seen a significant amount of cutting back of those selling positions, or buyers managing to attempt to rebalance. You know, as the sellers possibly hold positions here. We'd have to have a look at the data further, which we could do actually. Let's have a quick look and see who's moving here. So if we're looking at this, then we see the shorts look like the shorts are receding. You know, at this point. 1,000 right the way down to 60,000 here. So that's in a 1, 2, 3, 4, 5, 6, 7, 8, 9. That's in a 10-week period. So the last 3 months, we've seen a cutting back of short positions by half. And if we look at the long positions, we have seen in the same period, we are seeing the longs aren't really building, but they've remained relatively stable. So 37,000, and they're currently at 26,000. So there is a little bit of cutting back of the longs, but it's the shorts. The shorts are getting out of the way. So it doesn't look like there's a whole bunch of confidence in buying the yen, but the shorts are starting to kind of lose their confidence, and they're cutting back positions, and that is starting to see the yen just getting a little bit closer to net positive. Which what that basically tells us is that the yen is probably not a currency to be hugely confident about per se, but it's not quite as negative as it was before, and obviously the rebalance of that is causing some yen strength in the market. Now, if we compare that to the Aussie, that's remained relatively stable, you know. So where we've seen the sellers cutting back on short positions from the yen, we're not really seeing any movement from the Aussie. So that would sort of cause some Aussie yen weakness. So it's more of a yen story than an Aussie story. Which kind of makes some sense. So that's what we got going on so far. We're not really sort of like seeing one extreme against the other. As far as I'm aware, the Kiwi looked a bit different to that. But let me just, as far as my memory, no, the Kiwi's actually still relatively.
It's still just a little bit. It's still just a little bit difficult to be confident in the end, of course.
Yes.
But if you can find confidence or evidence to suggest that it can continue, then I think it's pretty early days to get into it. So we may be in a pretty good position to get a decent chunk out of this if it works.
I agree, mate. And just finally, the weakest currency this week on the COT data is the Swissy. I haven't looked at Swiss yen, but maybe we should have a quick look at that and see if there's anything there. You did, and nothing sort of giving.
It's on my list. Yeah.
It's on your list. Okay. Well, that's what the COT data is sort of suggesting this week, that the Swissy is the weakest. The Kiwi's actually the strongest, I think. That the euro is still relatively strong as well, but what we've seen with the euro is just a little bit of receding of the enthusiasm, and maybe the same as well from the Kiwi, just a little bit of receding of the enthusiasm. We're not continuing to pop to the upside, but last week did see a big cutback from the Swissy. Now let's just see if that was buyers or sellers that were moving this Swissy. And what we see, oh gosh, that's no good. What we see is it's the buyers. It's the buyers. So last week the previous week we saw 6,000 around about 6,600 lots of buyers, and that's down to 3,000. So that's halved. And the shorts have increased just a little bit as well. So we got 9,000 here, right up to 11,000. So actually, the longs are cutting back, and the shorts are increasing on the COT data when it comes down to the COT data from the Swissy. If we look at the open interest, it's remained relatively stable as well. So not a huge amount of interest in the Swissy, but maybe enough to suggest that that the Swissy could be one to watch this week. And if we have a look at the Swiss yen and see what we have.
Yeah, had a big reversal bar last week.
Well, that would explain it. I mean, the COT data showing us last week's moves, and that would explain that. So it's not going to be a forward indicator, but if we still like, and this is really where you want the fundamentals to kind of shape up, and the fundamentals are shaping up for the yen. If you think about those PPI numbers, it is still suggesting some inflationary pressure stepping in there. So I think there's a few options this week. I think some weeks we do inevitably struggle, but I don't think that's the case this week. And we are already seeing that. I mean, there's some keen selling going on, even within the moves to the upside, and I think the same's probably happened with the Aussie. Look at that, mate. I mean, this is the yen. This is all the yen. Aussie yen.
Yep.
If you look at that bar, it's doing that. And if you then start to compare all the yen pairs, people are buying the yen, and they might be a bit early, but look, it's all about the yen today, and I think it could continue to be the case. So it is just pick your poison. Yeah, currently, this is, we're looking at a 15-minute chart, but this is currently in an uptrend, so not of interest to me. It might be to some, but until this starts to break through some levels, I won't be trading this yen. But it is getting to the point where the evidence is stacking up pretty nicely.
Yeah, that's our thesis. We've both got the same page open.
Yeah.
All we need to do is find a way in. And wait for an entry, of course.
Sorry, Q just got this message from you, buddy. News also that Aussie government is in talks with China to restart trade, actually. Prime Minister said that on Sunday. True enough?
That's true.
Yeah.
Look, that's true. That happened like 2 weeks ago, where, pardon me, the Prime Minister of Australia and not his, he did meet Xi, but both the Foreign Minister and Prime Minister of Australia have met with Chinese officials and counterparts, and they have open dialogue. They haven't come to any trade agreement. That's not true yet, but it's hopeful, and the news is good on that front. But that's not going to help if the supply chain doesn't, or if it gets more stymied than it currently is. It's also not going to help if the students can't get into Australia. That's really going to be crucial, because there's so much money tied up there in Australian dollars. It's not funny. So whilst that's an absolute valid point, it's not something that I consider would trump the other fundamentals that are going on at the time.
Yeah,
that's my opinion.
Well, I think you're right, man. And also on that, talks are just talks. I mean, it doesn't mean that they've actually reached any kind of agreement.
Nothing concrete.
Point. No, and they could go on for months. Well, trade talks could they're complicated and complex issues, so they could go on for a long time before they actually reach some kind of resolution that they're both happy with. Same's going on with the UK and the EU right now. They're in talks to figure out how they're going to move forward, and now we've had 6 years of since we left the European Union. We probably, maybe the dust is starting to settle a little bit, so they might actually get to some kind of trade resolution, and we might get there in the end. But it's possible that they're still trying to punish us. I don't know. But again, it's just talks, and until and it's really complicated. It's probably less complicated between Australia and China, but it's really complicated in the UK. And they could go on for months. And to be fair, these talks have been going on really for the last 6 years. So it's not not anything that you could say it would be a reason to trade. So yeah, I certainly appreciate.
I'm extremely confident that these talks will result in a positive outcome for Australia or for both parties. But it's not yet there. There's no substance to it yet. And the reason I think that I am so confident is the reason that there were tariffs and issues with our beef. What else was there? Barley, I think, some other export. The Chinese just banned them from coming into the country. And that was in retaliation to our Prime Minister saying something ridiculous about whomever or whatever. It was just a disparaging remark that he made. And the Prime Minister's changed, right? So we've now got a new government, and the new government is trying to mend all of those issues that forced China into putting all these embargoes or tariffs or whatever into our products going to China. So whilst that has been a setback, there's no question, it's also opened up different markets for those producers of those products, like India and, the rest of Asia. So although that is short-term a big problem for Australia, when China says, okay, we're not going to buy your wheat or your barley or your beef or whatever the case may be, it does provide opportunities where the producers of these goods and services, or the foreign ministers or the trade ministers, go out and seek other markets, and they found them, in particular with India. And India is a massive, massive market. So if China do come back, okay, suddenly we've got producing X amount, let's say 10 trillion tons or whatever it may be, to India to replace, let's say, 40 trillion tons from China. But China come back with another 40 trillion. Well, guess what the result is? The result is we're selling more product at the end of the day. So, if they do come back, and it's a very valid point, as I said before, if China do release all of these tariffs and embargoes, then Australia looks really good. And as soon as that happens, I think you'll see an appreciation in the Aussie dollar, but that's not now. It's not right now.
Yeah. And I suppose the other thing is, even when that does happen, these numbers take a while to filter through. So there might be some interest initially, but it could take a while before we actually see the PMIs and things like that start to improve. It'll really come out in the surveys, I suspect. That's where we'll start seeing it first. But yeah, as you say, mate, not right now, and there's still some downside potentially for the Aussie yen. It is Martin Luther King Day in the United States today, which might make trade a little bit tricky. And I think what we've seen, really, looking at the fundamentals, is that Tuesday, Wednesday, Thursday, it starts to heat up. So from tomorrow, the market does start to heat up. That doesn't mean that you can't take a trade today if there's something shaping up there, but you may not get any movement or any significant movement today because of the fact there's a public holiday in the States.
Yeah, I think once this couple of hours has died down, it will go pretty quiet.
Yeah, I think you're right.
But again, I agree. It doesn't mean you don't trade. What it probably means is if you don't get into a trade, it probably won't trigger overnight. But if you do, then it probably won't go too far overnight. So it might be a good idea if you do get into a trade and get near to a take profit level that maybe you slip it in, just take your profit.
Yeah. But there's nothing else. I mean, I looked at the markets this morning and I didn't see anything technically shaping up for me. I agree with you about the euro and also, we looked at silver and silver is of real interest to me because of where, similar to the euro, where it is really important because we're not that far away from this point here, and we have already seen that this is an area of resistance which is currently holding. So there could be another, maybe a looks like around about 50 cents in silver. There could be that move still that comes out, but it might be that we just kind of mess around for a couple of days and this line starts to move even closer and suggest that is the area we're looking for. We do have an area of resistance over
I'm
here.
actually on top of that line now. The one thing that is I don't know about an issue with gold, silver, is that horizontal level, which will provide the strong confluence for me, is a little bit grey. It's just not clear as crystal, which is what I'd like it to be. That dotted line there, what is that where price is? No, it's not where price is. Whatever that dotted line is, that's arguably the level, right?
Yeah, I think so. Yeah, I think so. I mean, this is the futures, so this is probably slightly different charts you're looking at for what you're looking at anyway.
24.77, I've got it as. That's where
Yeah,
I've got that
24.73 is on the futures.
Yeah,
So it
thereabouts,
is
right?
it's in and around, yeah. And your price is probably 24.29 right now, is it?
24.12.
24.12. Okay, so you're 10 below mine. Mine's 24.24. So yeah, there's a slight change in it, but ultimately it looks like we've touched that level, and the resistance has started to kind of like kick in. But I've still got to see, I've got to see enough which would suggest, because the thing is, you could get in here and it doesn't break down. You could get in here, it doesn't break down. So the same thing might happen again. We might get down to here and start flying to the upside again, but there's obviously some resistance here. Otherwise, the price wouldn't be moving lower. It's not going at any real pace right now. But silver definitely has reacted more heavily than gold has currently. Well, maybe not actually. Maybe not. Gold looks pretty weak as well, but you can see some dollar strength just starting to kick in so far this morning. And I guess if in fact some decent dollar strength. So looks like the dollar and the yen are the two currencies that will provide the story today. And if you look at the dollar, it is at significant support here. So with no data just yet and a Martin Luther King Day, then the lack of liquidity in the market might well start to push this dollar relatively high for the day. This might well be a decent opportunity today. Actually, just buy the dollar, just get some dollar, short-term move in the dollar, and see if there's there's just some money to be made on an intraday basis today.
Yeah, euro dollar earlier was a lovely little setup from a slingshot point of view, but it's probably now too late for me to get in without a decent pullback because it's gone through my trade line as well. It's headed to the daily pivot and hasn't pulled back. If it does, then there's still an opportunity, but if it hits the daily pivot, then the edge is gone, makes it far more difficult.
Yeah. Well, a bit of waiting then, mate, I think is the name of the game. I don't know if anything else you want to have a quick look at.
Yeah, look, I'll have a quick squiz around at the weekly game changer bars and give you guys an idea as to what directional bias I have. And it really was about the yen, and it still is about the yen, I believe.
Cool.
For me, anyway. So all the weekly game changer bars, bar 1, 2, 2, were all yen orientated. Where is that thing? Gold, for me, has not triggered because I stuffed up the entry, but it should have triggered. That stop loss is also the entry for the short. So it should have triggered, and the target's down here, right? You can see the short isn't even on my chart. God damn, hopeless. Where am I? That's not the one I'm looking for. That's not the one I'm looking for. That's the one I'm looking for. Okay, so lots of game changer bars. We've already spoken about Aussie yen. And, there's a few more things to Aussie yen than we've already spoken about. And, most of you, actually, there's a few people in the room that I haven't seen for ages. And it's great to see you in. Thanks for coming in, Edwin, Harry, George, Faisal, and Catherine. Hi, how you doing? Thanks for joining. Oh, no, she's not in. Hello, sweet.
And Harry?
The thing with Aussie yen, apart from what we've already spoken of, is probably threefold yet to go. So everyone who knows me knows that I love this. The three amigos. So false break, and really here's the range that it's been false broken. False break at the top, false break at the top, pull back, false break at the top, pull back, and then the break of the range. And now a retest of the range with this bar here. So no surprise last week to see that we actually came off that level again. So it's break and retest. So we're looking for a C point here, A, B, C. And I really don't know where C exists, frankly, because we've got to get through this level first. Once we do, you know, I've got another take profit level here, but really there looks to be the level to me around the 79 mark, which is like a fair way from where we are right now. We're at 89, getting to 79. That's juicy if we can stay in that for a decent amount of time. So I think there's more to the story than what we've already told you, and I think that's pretty much it. This level's crucial. I've got a little bit above there, but, you know, there's the cloud of a price in there. That's crucial for this pair. And once it gets through that, I think we're, you know, happy days. So that was the first of the game changer bars. And I know some of you probably aren't aware of what a game changer bar is, so I better tell you that. A game changer bar is, in this case, because it's a bear bar, its high is higher than the previous day in this, week, because we're looking at the weekly chart. But these are also relevant on a daily chart. Wouldn't like to go too much lower than that. But there's a few things to watch out for. And the most important thing to watch out for is, where is the big boss? In other words, what's driving this market? What chart pattern's driving this market? Currently, I'd have to say it's this double bottom and higher low. And now we've got higher high, higher low, higher high. Is this the higher low? It may well be. We are at a support level after all. And that's why I think this level is crucial, because if we get through this, we drive down through here, and then we start to see the lower low, lower high, the lower low, potentially the lower high here. So we're in an inflection area, and this is it. This is it, absolutely. That's why I'm taking profit there. So the three amigos are definitely in play. We had the break of the neckline. We've had the retest of the neckline, and on we go. Why did I stick with that? Can't remember. Next one, CAD yen. Far harder to trade, in my humble opinion, because you already had a phase one, a phase two, and a phase three, which is stalled at this former support level. I think I need to see a far stronger pullback on this before I look to trade it, maybe to here somewhere before I look to trade it. Definitely some downside. I've got no qualms about that, but it's oversold. It's really oversold. So I just couldn't sell it from here. So that's why there's no real liking of CAD yen. In fact, I like the CAD as well. So I can't really trade that in all consciousness. Same could be said of this one. Very, very strong bar at a support level. Need to see a pullback to get into it. Directional bias, absolutely on top of it. Don't think that's wrong in terms of a direction, but to trade it from there on that bigger candle into a support level with absolutely, terrible reward to risk ratio doesn't make any sense to me. So that would be a no also, but directionally, 100% on board with it. And just to continue the story, I think we've spoken about Euro Yen today already. Again, you've got your three amigos sitting here. It's arguable as to where that range is, which is what I'd like to see anyway. That's right, I was telling you about game changer bars. Sorry, I lost my train of thought. I'll come back to it. Again, similar to Swissy Yen, big bar, support right here. It's not super strong support, but it has been resistance over here as well, support here as well. So you've got to take that on trust, and I don't want to smash through there. It's definitely a head and shoulders pattern, the neckline of which is arguably here anyway. So I'd like to see that break and be retested before I got into it. Next one's Euro Kiwi. Ash was speaking about the Kiwi. I'm not a massive fan of the Kiwi at the moment. The reason I'm not a massive fan of the Kiwi at the moment is not because I don't think it can be strong. It's because it's been so strong. It's just been a really, really strong currency. And you can see through here how strong it has been. It didn't really challenge the previous lows, which is interesting. So you've got a higher low in place. So that makes it interesting. Here's your resistance level, however. So again, on a reward to risk basis, it's really not the best. And you're going to bump into this trend line as well. So again, directional bias may be okay short term, but I don't think it's worthy of trading a weekly chart on. Pound yen, we've seen this chart 3 or 4 times already. There's no need to describe it any further. It does appear, however, to be through the strongest support level, which is kind of there. A retest of that would be interesting. There is another support level bang on where price is currently, well, has just bounced off basically. So that makes it difficult to trade as well. Trade line coming up through here, which has been broken, that kind of gives you an indication that maybe there is some downside coming or more downside coming. But I think this level here needs to be broken and retested before I get into it once again. Same. Pound Kiwi, whenever I see that, I just go to the next one because I've got no idea what happens next. You know, this market's been trying to fall, hits resistance in this trend line here. But it doesn't even go to support or the strong support level down here. So what's going on? Don't know. I really can't work that out. More a range trade, I would think, than anything. You know, bottom of the range, which is only very, very near to where we are. Top of the range up here. I think I'd be rather trading that long when it hits support than trading through the support. This is suggesting that we go long, but are we at the support level? You could argue that, I suppose, but I think the stronger support level is probably a little bit lower. So, you know, for me, whenever I see it running down here, every single candle on the trend line, to me, it's no, stay away. And finally, Kiwi yen. Kiwi yen, again, has that look of false break. And where's the bottom of the range is the question mark. You've probably got to say we're at the bottom of the range. Or I've probably got to say we're at the bottom of the range, which is denoted by that, which means to me, these indicate false break, that this is going to break to the downside. That's what the Three Amigos is all about. Where does it go? Maybe to here. So I think if you can find a way into that, and maybe it's there on the weekly chart, if you wait till next Monday, that is. No, it hasn't broken it. But that would be interesting a little bit more than it is to me as a weekly game changer. If it pulled back here, maybe hit that level, you'd still be taking a heck of a risk because you've got support again dead underneath you. In terms of direction, I'm with it because of the Three Amigos, but finding that break here is problematic. I think I'd rather see it as a false break of support, of resistance rather. So there's a bit of work to do to get into that. That's the daily chart we're probably talking about next week again. You can see the clear double bottom here. I don't think I want to be trading this short right now. It's wait until it actually happens. Or think of it as this: if it goes back to range, which it totally could, and you get the double bottom higher low, then there's a buy on until you hit this resistance level, confluence of which is probably there. So that's what I'm seeing. They're the game changer bars. And like I said from the outset, the three I thought were far better than any other were Euro yen, pound yen, and the best of them all, as we've spoken about for half the show, is Aussie yen. We'll have egg on our face if it doesn't sell in the next week or so, I can tell you.
Yeah, looking good, mate.
That's pretty much where I'm at, mate.
Yeah, cool. I mean, you know, guys in the room, if you've got, oh, Harry is Gary. Oh, Gary, Harry is Gary.
Hi, Harry.
How are you, Harry? Gary, what are you? Harry. Yeah, guys in the room, if you got
That
anything
sounds
to
like
add.
some sort of Japanese suicide pact. Harry Gary.
Yeah. If you guys got any
Sorry, Gary.
anything to add, then let us know. If you want to come on camera, if you just got some comments to make, that's no problem. I don't know why, but I'm still getting direct messages. I don't know why it doesn't go to everyone. It's a bit odd.
Well, that's why I'm
still
not
get
seeing
that?
them, I suppose.
Yeah, you still getting that?
Often, sometimes.
Setting's
Catherine's
weird. Oh.
sent me a hi, Catherine.
Yeah, why do they
Yeah,
do
look,
that?
well, because they're Zoom, I suppose.
The Zoom's meant to be
Just the way it
improving.
is.
I mean,
Is
they've been
it?
going around. They've been around for a while now. Have you seen, mate? That my cousin is saving up. She's got this VR kit, so she puts this VR
Oh,
on
yeah.
and she can
Yeah.
kind of like got this game where she climbs. Now she's saving for this suit, and so to go along with the helmet, and it's gonna kind of be able to pick up all her actions. And I've seen now some kind of company that is making this meeting room where you would put on your own VR and you basically sat in this meeting room next. I'll be sat right
You're
next
there.
to you. Yeah, it's crazy stuff. I mean, it's so Zoom better shape up. Better kind of like buck his ideas up if it wants to compete in what's coming. I mean, some of the stuff is just scary,
Beam me
absolutely
up.
scary.
Beam me up, Scotty.
Yeah, I I don't know. I mean, you have to kind of like stay ahead with this stuff. It's a bit like the stuff we talked about with Bitcoin. We haven't discussed Bitcoin for quite some time now because of Simon's not been around for a little while. But the Bitcoin's also in fact all the cryptocurrencies have had an amazing run. You talked about at the start of the show what was going on at the start of the end of last week. Bitcoin up an incredible amount. I think it was up like 30% or something from the lows.
Whoa.
Or just currently 20,000, and it was at near 16 not too long ago. So it's at a real pop. 20,700 currently for Bitcoin. But 7 days, 21% in the last week. It's up. So we're really starting to see some of these things start to take hold again. Have we reached the bottom? I mean, that was the other thing that I was starting to consider this week. Have we actually found the bottom in the market, which is way above where I thought it would be? If it is the bottom, I don't know if we've reached it or not yet, but it's way above where I thought it would be. But certainly things are starting to look more positive.
I'm still a seller.
Yeah, and it's a difficult one, mate, because you know what? There's this there's this metric when the S&P, what happens to the S&P the first 9 days of the year or something like that tends to be how it shapes the year. We determine whether it ends up above its open of the year or below it. And this year it's been very bullish, so it's suggesting that we're going to get a bullish year. That doesn't mean that we don't find the bottom in between that time. But it does suggest that the year could actually shape up pretty well. And I'm with you, mate. I'm still a bear at this point. I'm still on the bearish side. I think that there's probably enough that would suggest that those valuations that were already lofty before we started the move to the downside, or before COVID, if you like, they were already lofty. I don't think that they've reached an area anywhere near fair value. Near fair value. So I think there's still some downside coming. ETH is interesting. Yep. Catherine, you're absolutely right. I mean, they all are now. ETH up 20% near enough in the last 7 days. I think XRP is incredibly interesting. Cardano is still of interest as well. So there's 4 in there that I'm watching out for: Bitcoin, Ethereum, XRP, and Cardano. I think all of them have got some positivity that could really sort of change things around. So crypto market is going to start being talked about again this year, mate. I would almost guarantee it. I think the bulls are going to start sharpening their horns again pretty soon.
I hope Simon can come back on board soon. Then that'd be great.
Yeah, I'm sure he will. Okay, mate. Well, I think we are there.
And George.
And George, missing George.
George again. I'll send him a message.
Yeah, see where he's at.
He's probably still having his second honeymoon, I think.
In Bali, yeah.
I'm not
Yeah,
sure.
well,
All right,
let's
yeah, we
wrap
better
it up,
get out of
mate.
here, right?
And yeah, thank you to the guys for coming in and being our trading buddies. And you know, have a great week trading. Jeff and I think we've expressed our thoughts. If you guys have got any other thoughts, then hopefully they work out, and maybe let us know if they did on Thursday, which when we will be back on the Thursday.
Yep,
You are
and
welcome,
half the
Captain.
news will be done. Half the
Yes,
news will be
yeah, be
done,
interesting.
and a
Yeah,
little bit more to come. So
yeah, for
see how we
sure.
go.
Yeah, Thursday could be interesting. We'll know how everybody's week is shaped up by Thursday. But yeah, we will see you for then, and we'll check in, see how everybody's doing.
Have a great week, guys. Thanks, Ash.
Thanks, buddy. See you soon.
Bye bye for now. See ya. Why won't this end? Here I go again. There it is.